Wall Street is set to pull back on Thursday after clearing fresh records. U.S. benchmarks are seeing red. Today's decline will come as tech shares are dragged lower and amid political tensions. U.S. economic data show that initial jobless claims in the latest week declined by 22,000 to 222,000. That is the lowest figure since March of 1973. And in the previous session, U.S. indices closed higher on Wednesday with the help of shares in the commercial and professional services, diversified financials, as well as healthcare equipment and services. Also in the previous session, the Federal Reserve released their Beige Book. It showed that an expansion of the country's economic activity in September through early October showed an improvement in the energy sector as well as a modest growth in employment. 52% of S&P 500 constituents traded higher yesterday. And moving on to company news, American Express reported quarterly profit and revenue that beat forecasts. Results were boosted by loan growth and higher spending by card members. Separately, the company announced the retirement of Chairman and CEO Kenneth Chenault effective in February. Meanwhile, eBay earned an adjusted 48 cents per share for its latest quarter, matching estimates. Revenue came in above forecasts as it added nearly 2 million active buyers. But at the same time, the online marketplace cut its annual profit outlook for the second straight quarter. In overseas markets, we saw the Nikkei gain 0.4%, the Hang Seng dragged lower by nearly 1.9%, and South Korea's Kospi fell by 0.4%. European indices are also losing ground today. Here in the U.S., the S&P 500 is in the spotlight. A break of a short-term rising trendline support is being monitored. Short positions below 25.56 are preferred with targets at 25.42.5 and 25.39.5 an extension. As for the Dow Industrials and the Nasdaq, both benchmarks are turning lower on an intraday basis.